So welcome to this chapter. So this chapter is relevant costing. So what is relevant costing? Relevant costing is where you have to take a decision whether uh, you have to go with a particular choice or not. Okay. So you have like several choices and whether you have to choose a particular choice or not. So decision relevant costing helps you in decision making areas, and this is like very useful in terms of even real world applications. Okay. So it is not something like only bookish knowledge. You can apply it in real world, and if you're doing a business or if you're taking a business decision, in all those areas relevant costing is very useful. So we'll start with the theoretical elements of relevant costing, and then we'll move on to the problems. So relevant costing is applicable only to companies that have already recovered their fixed cost. Okay. So this concept, okay, has to be applied only when companies have recovered their fixed costs. That means we are ignoring their fixed costs. Okay. So assume that you are running a company and you are like producing 10 products, okay, 10 different types of products. And now you have a question, okay, should I produce another product, a new product, which is called as product number 11. So the assumption is your company has already recovered its fixed cost, and the 11th product is we are only thinking in terms of whether to produce the 11th product in addition to the first 10 products. Okay, so all these products are very different in nature. Okay, so the first 10 products are helping to recover your fixed cost. The 11th product, okay, is will help you not in terms of recovering the fixed cost because it's already recovered, but whether it will give you an additional income or not. Okay, so that's about relevant costing here. So this technique is a short-term technique, and it cannot be applied when you have still to recover your fixed cost. Okay, so it cannot be applied in a area like consultants, because consultants don't have a fixed cost. Every assignment that they get is a is an income for them. Okay, so there's nothing like fixed cost for a consultant. Okay, everything is a income for him. So for him we can't apply this. Okay, but where we can apply this is in terms of a company where they already have a cost and a further income is to be taken or not. Okay, so this assumption is the usual assumption in throughout relevant costing. The next one is, this is indicated in the question as, when you read a question, this will be shown as it is a one-off order or an additional order. Okay, so one-off means it's a one-time order only, and additional order is like the assumption is your fixed costs have already been recovered. Okay, so relevant cost is not applicable to companies that have to still recover their fixed cost. So you cannot apply this technique to this kind of a company which is still to recover their fixed cost. And what does this technique indicates? This technique indicates that not all cash flows and costs are to be considered while evaluating a decision. Okay, you should not consider all the cost, cash inflow and outflow at all times. Certain things have to be ignored and certain things have to be considered. So certain cash flows and costs are ignored as they are not useful in decision making. Okay, it's not useful. So what are the costs that you have to ignore? So costs like sunk cost. Okay, what is sunk cost? We'll see. Sunk cost is a cost already incurred. So you have already incurred that cost. Okay, so a best example is uh, you have already paid this year's college fees. Okay, now if you feel that should I discontinue the course or not, sunk cost is gone. Okay, once you have paid it, it is gone. Okay, or you have booked the airline ticket. After booking the airline ticket, you consider whether to go to that particular place or not. See, now you should not think about the air ticket cost because it is already spent. Whether you go or not, it is spent. Now the question is very simply whether you should go to that place or not. Don't worry about the air ticket because it is already spent. Okay. The second one is committed cost. What is a committed cost? So committed cost we can put like this: a cost that is promised to be paid in future. Okay, we'll add this one. So we can say it like this: a cost that is promised in the past to be paid in future. So for example, you say to your house owner, okay, that whether you stay or whether you are going to quit from this, whether you're going to uh, move away from the rental place, okay, you will pay some 1 month amount, okay, as a what to say, as a maintenance amount, okay, or a repair amount or something, okay. So you have said this. So whether you stay there or whether you are going to move out of that place, this is a committed cost. You have said that I will pay, okay. So this 1,000 has to be paid in the next month or something, okay. You have to pay this. So whether you are moving out of this out of the place or you are going to stay that, that decision will not affect this 1,000 rupees. This 1,000 rupees has been promised, okay. So your consideration is very simple. Don't worry about the 1,000 which you have promised for repairing the house, because that has to be paid. You have to think only in terms of whether you're going to shift your house or you're going to stay there, okay. So that's about committed cost. So there are non-cash costs. So something like depreciation. So if you see, depreciation is a non-cash cost. Amortization is a non-cash cost. Return off, okay. No, not all return offs, okay, but some return offs are a non-cash cost, okay. So even a provision is provision for bad debits, like that. So that kind of provisions, all these items are non-cash items, okay. So just because a company has a depreciation, that does not mean that company has a cash expense, okay. Don't think like that. The next heading is allocated fixed or allocated head office cost. So okay, this is not a real cash expense, but just a accounting treatment, okay. So you can just ignore it, okay. So for example, you have you are a HOD in a college, okay, and your college is like paying the principal a salary. So principal salary is like 1 lakh. So the principal runs around 10 departments, okay. So each department has to bear his salary. So each department will be allocated 10,000 as a principal salary, okay. So each department has to bear that, but that is not an actual cost at all, because that 1 lakh is to be paid even if there is just a single department, okay. So unless the last single department is to be closed or not, at that decision only his salary becomes a relevant one. Until that point of time, so if just like one department is to be closed, whether you are closing one department or not, his salary has to be paid. So it is an unnecessary kind of a cost element which you have to consider for taking a decision to close a particular department, okay. So that's about the allocated cost. There are certain costs which we have to consider. So number one is cash based cost. So any cost where you are going to pay actual cash. Incremental cost. Incremental is, so for example, currently we produce currently we have one office which is costing 10,000, and okay, the question is, should we expand and go to a new office, okay, office for rent for this cost of 20,000? If this is the question, already we are paying 10, okay. The question is not about 10 or 20. The question is about whether, okay, the actual relevant one is the incremental amount of 10,000. That is what we have to consider, okay. The question is not about should we go to 20,000 office or not. The question is, should we spend that additional 10,000 or not, okay. So the framing of the question should be usually different. So additional infrastructure cost is similar to that. Tax, actual tax paid. Marketing cost, anything you have spent for marketing, that resale value of any asset, any additional working capital you are investing in the business, any future cost, Okay, any cost that has to be incurred in the future. And last one is opportunity cost. Okay, so what is opportunity cost? Opportunity cost is like very simple here. So imagine that you are doing a BCom course. Okay, a BCom course. So in BCom course, what is your total cost of doing BCom? For example, if 50,000 is going to be the salary, sorry, fees per year, for 3 years, it would be 1,50,000. Do you think this is the actual cost? Okay, of course you will incur something like examination fee, this and that, travel and all. But more than this, there's some other expense. See, if the student has not studied BCom, okay, with his 12th standard, school completion, he could have gone for a job, right? He could have gone for a job. This job could have given him a salary, right? It could have given him a salary. How much? Per month around some 10,000. Imagine it's 10,000. So 10,000 rupees of salary per month for 12 months into 3 years. Okay, that is the opportunity cost. So you hope you got the idea. So this is the opportunity cost concept. So this is the opportunity cost. So look here, this is 1,50,000 and this is going to be 3 lakh, sorry, 1,20,000, 3,60,000. So by doing BCom, okay, the person is actually losing 3,60,000. So what is the total cost now? So the total cost, if you take, it would be 1,50,000 plus 3,60,000. So totally he is like directly and indirectly he is spending 5,10,000. Okay. So then why are like BCom students spending so much money? They are losing 5,10,000 because the salary that they will get after doing BCom would be like much more higher. Okay, it won't be like 10,000, it would be like 20,000. So easily they can recover this 5,10,000. Okay, they will recover it in around some 2 years time or 3 years time. They will recover easily this amount. That's why people are doing BCom. Okay, so that's about the concept here. Hope you got an idea about relevant costing. So what we will do here is we will move on to the each sum and we'll do that sum. So we'll start from here. So we'll read the question. Brontico is considering whether to undertake some contract work for a customer. The machinery required for the contract would be as follows. A special cutting machine will have to be hired for 3 months for the work. The length of the contract, okay, 3 months is the length of the contract. Higher charges for this machine is 75 per month with a minimum charge of 300. So we have to do a relevant costing for this. Okay, the first one is a special machine. So special machine, you have two choice. Either you can spend 75 into 3 and get the amount of, I think it would be 225. Okay, or you have to pay a minimum of 300. Okay, so the minimum of 300 will be the answer. Okay, because 225 is like very less. Minimum you have to pay 300 for the machine. So that is the first one. The second one is, I think we can put one more. You can just put it like A, B. So all other machinery required in the production for the contract has already been purchased by the organization on hire purchase terms. The monthly hire purchase payments for this machine are 500. This consists of $450 for capital repayment and 50 as an interest charge. Okay. See, this is a additional order that the company is getting. Okay, and the company already has these machines. See, all other machine required for the production for the contract has already been purchased. Okay, so the company has already purchased, we are just going to use it. So there is no additional or incremental cost. So we'll just put it as other machines. Okay, so already purchased, so this cost would be 0. What about the third one? So the third one, okay, I think it still continues. Okay, we can't end it there. The last hire purchase payment is to be made in 2 months time. See, the hire purchase payment and all is not required for us because we are only using the machine, okay, for a temporary period. Okay, there's already like many other products which are being produced, and we are just using this machine for a particular time. Okay, so the assumption is these costs are incurred by the normal production, not by this additional production. Okay, the cash price of this machine was 9,000 2 years ago. Okay, that also is relevant because it is sunk cost. It is being depreciated on a straight line basis of 200. Okay, that is non-cash cost. However, still it has a useful life which can be operated for another 36 months. So if you want to put the machine cost 9,000 is a sunk cost, and also the depreciation of 200 is a non-cash cost. Okay, so these amount will not come under relevant costings. Okay, these are not additional costs we are incurred because of this production. Okay, that's what you have to think about. The machinery is highly specialized and is unlikely to be required for other more profitable jobs over the period during which the contract work would be carried out. Although there is no immediate market for selling the machine, it is expected that a customer might be found in future. It is so see, he's telling all this about this other machinery. Okay, so what will happen with that machine? See, that machine is already there, it's already being paid. Okay, we are just using a little bit time when it is free. Okay, so that is an assumption here. That is what is normally relevant costing is all about. Okay, so we are not going to incrementally use any charge. Okay, if we are going to incrementally incur any charge, that is like shown as relevant. Okay, it is further estimated that the machine would lose, okay, this machine, other machine, would lose 200 in its eventual sale value if where we left, if it is used for the contract work. So see, becomes a relevant one. Okay, this becomes a relevant one because fall in the value of machine due to contract work. So this contract work, if we use the machine, okay, the machine will lose 200 of its value. So totally, how much should we charge? The relevant cost for the contract is equal to 500. Okay, so that's about this problem. We'll move on to the next. So we'll also copy the format so it is like much more quickly we can do. So this question again has some ABC elements. So we'll read. Required the relevant cost or opportunity cost for the job. Okay, so what is the relevant cost or the opportunity cost? So an information technology consultancy firm has been offered to an urgent job by a client, okay, for which a price of 2,500 has been offered. the job would require the following. So he is like willing to pay 2,500, whether we should take this job or not. Okay, but we don't need to consider the price of it. Our consideration is only the cost of it. Okay, 30 hours from one member of staff who's paid on hourly basis. See, every hour we have to pay him, okay, for this employee, and 30 hours of his time is required at a rate of 20 per hour, but who would normally be employed on work for clients where the charge out rate is 45. Okay, no other member of staff is able to do the member of staff in questions work. Okay, so see, this job can only be done by this particular person, and we need 30 hours of time. What is the rate? Normally we pay him 20. Okay, but we could make $45 when we use his work. Okay, we could then sell his work for $45 per hour. Okay, so the first concept here is, see, in relevant costing we don't need to think about the profit. Okay, we only have to think in terms of at least break even or not. Whether we could break even or not, that is a question here. So this 45, okay, we don't need to pay him at all. Okay, we don't need to pay him this 45. What is required is we have to pay him minimum $20. Okay, so for other clients, see, we don't have any other opportunity here. Okay, this is not an opportunity. We are not losing out anything. Okay, because if he is going to be taken from some other job and put here, then we have to charge 45 because we are losing our profit. But this guy, is he free or not? That's a question here. Okay, who would normally be employed on the work of other clients where the charge out rate is 45. So we have to make an assumption here, or else I don't think we could work out this problem. The assumption is the employee is not on any other work, okay, with the company or with the firm. Okay, so he's not with any other work with the firm, so he's like idle only. Okay, but even though he's idle, we have to pay him the salary. Okay, so staff salary would be, we need his 30 hours of work and we have to pay him minimum 20, so that will come to 600. Okay, next, the use of 5 hours of mainframe computer time, which the firm normally charges out to the external users at a rate of 50 per hour. Mainframe computer time is currently used 24/7 a day, 7 days a week. So this is not available at all. Okay, so it is like very clearly he says that this is not, spare is not available. Okay, so if we use the mainframe computer time for this job, then we will lose out this 50. Okay, we lose out this 50. So we cannot lose out this 50 because of this job. So we have to charge this customer only. So mainframe time. Okay, so that's going to be 5 hours of time into $50 per hour. So that will come to 250. So the last one is supplies and incidental expenses. Okay, would be 200. So we'll just put other expenses. Okay, so these are things which we have to pay. Okay, we have to pay. So these comes to 200. So what's the total? The total is 1050. Okay, so that's about the concept here. So what would be the answer if we change our assumption? So that also you should know. So if we change our assumption here, assumption for the staff salary, the employee, okay, I think we can put it as staff Okay, the staff is on an other work with the firm. Okay, so he is on other work. Okay, here he is not on another work, but here he is on another work. So we have to take him from that work and we have to ask him to work for this job. So we are losing the amount. Okay, we are losing how much? The charge out rate is 45. We pay him 20. Okay, we charge from some other client 45. So this 45, we have a profit of 25 that we are foregoing. Okay, so the total amount we have to pay him 20 plus 25 of loss we are incurring because he is like put into this job. So totally 45 we have to charge him. So the amount would now be 1800. So that's about this sum. We'll move on to the next one. So here we have another one more different type of question in relevant costing. So we'll copy this format. So we'll start. So I think these are individual questions, so we don't need to have the total. Okay, these are just individual small questions. So he says the salary to be paid to a market researcher who will oversee the development of a new product. This is a new post to be created especially for the new product, but the 12,000 salary will be a fixed cost. Is this cost relevant to the decision to proceed with the development of the product? Okay, so first he's asking whether this salary is relevant or not. Okay, see, the salary is relevant. Okay, because it has to be paid. Okay, because of the decision, okay, to develop new product. Okay, so we don't need to put amount and all. Amount column we don't need to have. So whether it's relevant or not, that is what we have to tell. Okay, so whether it's relevant or not, it is relevant. Okay, so I think we could actually put it like this. Whether it's relevant or not, the answer is yes. Okay, so we'll go to the next one. So if you want to know like why it is a relevant cost, okay, why it is a relevant cost, we can also put that because it is a future cost. Okay, it is a cost which we are going to incur in the future, so it is a relevant one. Okay, the next one is B, the 2,500 additional monthly running cost of a new machine to be purchased to manufacture an established product. Okay, so this is an additional monthly running cost. Okay, so it is an extra incremental cost. Okay, the 2,500 additional monthly running cost of a new machine to be purchased to manufacture an established product. Since the machine will save on labor time, the fixed overheads to be absorbed by the product will be reduced by 100 per month. Are these costs relevant to the decision to purchase the machine? Okay, see, there are two costs here. So in B we have two costs. One is the additional savings. Okay, and the next one is lower absorption cost. Okay, so if you have read overheads chapter, you would have got the idea here. Okay, lower absorption cost, okay, is additional savings relevant? The answer is yes. Okay, why it is relevant is, see, it is a future savings. Okay, we are going to save this because of the decision. Okay, so we can say that it will save the cost in the future. Okay, so because of that it is relevant. But what about the absorption? Okay, it is not a relevant cost. Why? It is a non-cash cost. Okay, it is a non-cash cost. Okay, I don't think we need to put any explanation because it's a non-cash cost. Okay, so fixed overhead is absorbed is either way the same amount. Okay, so whether you produce or not, it is always the same amount. Okay, so the next one is office cleaning expense of 125 for next month. Okay, I think that's what they are going to pay in the next month. The office is cleaned by contractors and the contract can be cancelled by giving 1 month notice. Is this cost relevant to a decision to close the office? Okay, so every month we are paying 125 for the office cleaning cost. The office cleaned by contractors who can be, so if you give 1 month's notice, he will thereafter won't ask you cost. Okay, but is this a cost relevant to a decision to close the office? Okay, see, again it has two elements here. If office is closed in 1 month, okay, or we can put like this. Okay, as we don't have space, we'll cut that. Closed in 1 month, closed after 1 month. See, if you are going to close in the next 1 month, okay, we have to pay him the normal salary of 125 plus that 1 month's notice also we have to pay, because we are not giving him enough time to adjust, right? So if you are going to close it, I think we can say it 1 month. Okay, closed in this month itself. This month itself you want to close. Okay, closed after this month. Okay, so if you're going to close in this month itself, you have to pay that 125 rupees. So at that point of time it becomes relevant. Okay, because it is a committed cost. You have told him that you will give him you will give a 1 month's notice. As you are not giving that 1 month's notice, you have to pay him a penalty. Okay, so that becomes a committed. But if you are going to close after 1 month, you have now itself told that you are going to close it. So he will just get asked for the 125 for the work. He will work for you. He will do the work and then he will move on. Okay, so then it is not a relevant cost. Okay, because we are going to use it. Okay, we use the service. Okay, here we are not using his service, but we have to pay 125. Here we are using his service for 1 month and we are going to pay him. Okay, so the last one is expense of 75 paid to the marketing manager. This was to reimburse the manager for the cost of traveling to meet a client with whom the company is currently negotiating a major contract. Is this cost relevant to the decision to continue the negotiations or not? Okay, so see, this 75 is already paid. Okay, whether this 75 is this 75 is already paid, so it will not affect what is going to happen in the future. So what is this cost? This cost is a sunk cost. Okay, so cost already paid and will not affect future decision. This will not affect the future decision, okay, as it is already paid. So this is the manager travel expense. Okay, so that's about the concept. Okay, so is it a relevant cost? The answer is no. So see, these are like small problems. Okay, only in a lengthier problem we will get much more complexity, and it will be like quite tough. Okay, here in this type of small problems, it's all about like deciding one statements here. Okay, even in a lengthy problem, it would be a list of like 10 statements or 20 statements where you have to solve each of the statements little by little. Okay, over that question you will finish the answer also. Okay, so we'll move on to the next question. So a special job would require 50 hours of labor time. Employees are paid $10 per hour. There is sufficient idle capacity among the workforce for 40 hours for the work. Okay, I think we'll see. I think before starting with this question, first we'll see like how to solve this kind of a labor question. See, labor questions has to be find out whether relevant or not through this kind of a logic. Okay, first, whether do we have spare capacity in our factory to manufacture an additional order? Okay, if yes, the employees are free, okay, they are having free time, then we can ask them to do this extra work also, so we don't need to pay them anything. So assume that we pay them a monthly salary and they are also free. Okay, then in terms we can ask them for the relevant cost is 0. In case we pay them monthly salary and also they are fully occupied. Okay, so in that case what we can simply do is, okay, we can hire more people from the outside, because already these people are like occupied. We can better hire people from the outside, so we can consider the extra cost of labor for people we got from outside. Okay, in case we can't get any labor from the outside, then at that point of time what happens is we have to move our existing labor to this contract. Okay, they're 100% working, so if they want to have, if they still have to work in this job or in this contract, then they have to be stopped from doing the work in the existing job and they have to move to this particular order or contract, and we have to make them work here. Because of doing this, they are they are losing the contribution. Okay, they are losing the money they could have made by producing the normal products. That amount is lost, so that amount also have to be recovered here. Okay, so that's how the sum works. You will understand this better when we see this question, and also like further questions when we go. Okay, the lengthier questions you will understand it better. So we'll start from here. A special job would require 50 hours of labor time. Employees are paid $10 per hour. There is sufficient idle capacity among the workforce for 40 hours. Okay, so even though we are paying them for $10 per hour, they are 40 hours, they are free only. Okay, so the extra 10 hours would be worked in overtime. So the balance 10 hours we can ask them to work for overtime, for which the additional pay will be 12.5. So normally they are paid 10. Okay, in terms of overtime we can pay 12.5. So how this should be computed? Okay, so the question is labor cost. So labor cost is divided into two parts here. One is spare labor, okay, and full capacity labor. So spare capacity, there is no charge at all, so it is 40 hours, okay, into 0. We don't need to pay anything. So that becomes 0. But what about the full capacity? Once we are reaching full capacity, then we have to pay them, to get the work we have to pay them overtime. So overtime we have to pay them, for 10 hours we have to pay 12.5. So the amount comes to 125. Okay, so the total relevant cost would be 125. Okay, so that's about this sum. We'll move to the next one. So the next sum is like similar to this. So it says a special job will require 20 hours of skilled labor. The skilled workforce is paid 15 per hour, okay, and is working full capacity, so they're not available to work in this one. If the job is undertaken, the skilled labor would be taken off other work that earns $12 per hour. Okay, so now what becomes a relevant costing? So we'll copy the previous thing. So number one, there is no spare capacity, so this will not come there. So first we have to pay them, okay, because they have to be paid a variable cost, because the time is like only 20 hours. We need a workforce for 20 hours, and all the 20 hours we have to employ them because they are already full with other work. Okay, so we have to pay them for hourly wage. So 20 hours of time we have to get from them, and we have to pay 15 we have to pay. So the totally I think that comes to 300, and thereafter there is a contribution lost. So because of using those labors in this particular job, okay, our company is losing $12 per hour, so that you have to mark. Okay, so totally it is 540. So that's about the concept here. We'll move on to the next one. So this is about materials. So materials is like quite interesting. Here the concept has to be understood in terms of this whole chart. Then only we could do materials concept here. So we'll start from this concept and we'll do the table here. So in terms of material, this is the starting point. So first we have to check whether are the materials already in stock. Okay, so the material that we have to buy for the special order or this additional order, is it in the stock or not? If it is not in the stock, it means that we have to freshly purchase it. So the purchase price of the material is the relevant cost. Okay, assume that it is already in the stock. So if it is already in the stock, then if it's yes, are the materials regularly used? Okay, whether the products are regularly used or not. If the products are still regularly used, then we don't have much of a problem, because if we are going to use the existing material for this order, new materials will be bought. Okay, will be bought. So the purchase price is the correct concept. So we use from the stock, okay, for this order. So the inventory has to be replenished. Okay, it has to be replenished. So anyway, new purchase items have to be purchased. So the purchase cost of that items to replenish the stock will become the relevant cost. So that is about, again, the, if it's going to be yes and yes, it's going to be purchase. If it's going to be no straight away, it's going to be again purchase cost only. In terms the product is not a regularly used item, then what is done? Okay, it is already in stock, but it is not a regularly used item. Okay, in that case, what should we do? In that case, do the materials have any alternative use, or would they have to be scrapped? Okay, if not used. So is it going to be thrown away in scrap if it is not used, or it doesn't have any other use? If it's going to be just scrap, we'll just throw it in scrap, means then the scrap value, because we could have thrown that useless product at least for scrap. Now that useless product could be used in this particular order, so the scrap value becomes the relevant cost. Okay, sometimes there would be a disposal value, the company has to pay to dispose of it. Okay, so that is actually a different kind of a treatment we have to do. Okay, because scrap value is an income that the company loses, but disposal value is an expense that the company has to pay to dispose it off. Okay, so actually scrap that is foregone, it is a specific cost, but disposal value which is not undertaken, that would be a savings for the company. So that would actually become a savings for the company. Okay, when we do a problem, you will get the idea how it works. If the same item which is in stock but not regularly used, that item can be used for some other purpose. Okay, then how it is used for that some other purpose, that value we have to take, because we could have used that product, that useless product could have been used in some other item or product, and we could have sold it. Now we, by using this material in this particular order, okay, we are foregoing this opportunity. So this opportunity cost will become the relevant cost. So this is also an opportunity cost, this is also an opportunity cost. Okay, so it might look like a little bit confusing, but we'll do this question so you'll get a better idea. Okay, so we'll start from this. So number one is material, units required, units in stock, and relevant cost. Okay, so before putting that relevant cost, okay, we'll have to put a reason, and then we'll put a relevant cost. Okay, so okay, so I think we can start. So we have we'll read the question. So O'Reilly Co has been approached by a customer who would like a special job to be done for them, and who is willing to pay 22,000 for it. The job would require the following materials. These are the materials. These are the total units which are required for this particular job. These are already in inventory. This is the book value. Book value is the historical price at which it has been bought. Realizable value, if you are going to sell it, that is the disposal value, and this is a replacement cost. So replacement cost is a purchase price. If this product is going to be used, then if you want to purchase from the outside market, that is called as a replacement cost. Okay, so I think we'll start from the first one. So material B, okay, sorry, it starts from material A, B only here. So material A is still there. Okay, but we have to put we have to include it. Okay, because it is required. So totally 1,000 units is required, and there is nothing in stock. Book value is nothing, but if you want to purchase, it is 6. Okay, so it's nothing there, so it would be $6. Okay, so $6 into so this would be like cost per unit, and this would be the relevant cost. Okay, we have to put the reason. So it has to be freshly bought. We have to buy it, okay? Or we can put as new purchase. New purchase, and the amount would be 1000 into this amount. So 6000 is the value. So the second one will be material B. Okay, material B, he says, is used regularly by O'Reilly, and if units of B are required for this job, they would need to be replaced to meet other production demand. That is, are the item or the goods in stock? Okay, if the answer is yes. Are they regularly used? And again the answer is yes. Then it is we have to purchase it newly or freshly. Okay, so how much of this item is in the stock? Only 600 is there. So B, we can classify it like this. Units required is 1000. Okay, it's 1000, but 400 is already in stock. 600 has to be purchased. Okay, so this is new purchase, and this one is already in stock. Okay, but even though it is already in stock, okay, it has to be replenished. Okay, what would be its price? Its price would be 5. Okay, so if we use the existing, okay, already in stock is, I think, 600. Okay, already in stock is 600. Freshly we have to buy 400. So freshly bought is 5. If we replenish it, the existing one is gone, but we have to again buy a new stock. Okay, so the rate would be okay. So B is done. We'll move on to the C. Material C and D are in inventory as a result of previous overbuying, and they have a restricted use. Okay, you can't use them for anything. So what happens is, are they in stock? Yes. Are they used regularly? No. So we have come here. Okay, no other use could be found for material C, but the units of material D could be used in another job. Okay, so no other use has been found for C, so it has to be scrapped only. It has to be thrown, scrapped. So at least if we throw C as scrap, okay, so totally how many we have? Totally 1000 is required. Out of that 1000, 700 is already there, but it is scrap. Scrap means it is going to be thrown into scrap. 300 is like new purchase. Okay, so 700 is either way it is going to be thrown out as scrap, so we can only pay 2.5 for it. Its worth is only 2.5. Rather than throwing it for scrap, we can use in this order. So 2.5, and the balance is new purchase. The balance 700 units is new purchase. So new purchase has a cost of 4. So it's 4. So we got it for C. The next one is D. So material D could be used for in another job as substitute. So see here we have come to this point and it is moving to here. Okay, so now we have to charge. See, this product could be used as a alternative or something in another product. Okay, so D could be used in another job as a substitute for 300 units of material E. Okay, for some other product we can use it as a substitute for material E, and material E which currently has 5 per unit, okay, of which the company has no units in inventory. So there is a product called as E that would be used in some other production. Rather than using E, we can still use D itself. So D has an alternative use. D can be used as a substitute for E. Okay, so what is the purchase price of E? We would have purchased 300 into 5. Okay, so we can put it here. Purchase cost of E is equals to 1500. Okay, so how much of units like that we could use? So this totally 200 is what is required, and 200 is in stock. Okay, and E, okay, E helps us, sorry, D helps us to use as a replacement. Okay, cost of E is replacement. Okay, and that comes to 1500. So purchase cost of E, you can put it as replacement. Okay, okay, replacement, if you put, it will not work. You can put it as opportunity cost. We could have used it in terms of E. Rather than using it for E, we are using it for this. Okay, so how can we say that this is 200, that is 300? How it is not matching? Okay, it is matching because the assumption that we are making is this 200 units of this product and this 300 is a equal substitute. See, that's what he says. But the units of D could be used in another job as a substitute for 300 units of E. Okay, 300 units of it is a substitute. Okay, so we can't put 200 like that and all. It's 300, it is substituting directly. So 300 into 5. Okay, so D helps not to buy material E. Okay, so 300 into 5. But because using in this order, we have to purchase it. Okay, so what is the relevant cost of material Okay, so that's about the concept here. We'll move on to the next problem. So we'll move on to the next problem. So the next problem is a lengthy problem. This question was asked in December 2014 in ACCA exam. So we'll use this problem. So you could see the length of it. Okay, so you have to solve little by little, then only it will it is quite easier to move on. Okay, we'll start from the required. So the required is prepare on a relevant cost basis the lowest cost estimate which could be used as the basis for the quotation. Okay, so you are going to give a quotation for getting a particular order. Okay, so the cost should be as low as possible. That's how you have to price the cost. Okay, that's how you have to cost it. Explain briefly your reason for including or excluding each of the cost in your estimate. So you have to give a reason also here. So we'll start from here. So we'll take it as particulars. The next one is some calculation. If we want some calculation, then we'll put the amount. Then we'll also put the reason. So reason, I think this is enough. I think this would be perfect. So we'll start from the beginning. HighlightCo makes sofas. It has recently received a request from a customer to provide a one-off order for sofas. So it is a one-off order. That's why we are using relevant costing. Okay, in excess of normal budgeted production. Okay, so this is beyond the normal production. Okay, so normal production means why he gives this as a sentence is because we are recovering the fixed cost. That's why he tells this. The order would be completed within 2 weeks. Okay, in 2 weeks time this will be finished off. The following estimates have been prepared. So he has given direct material, fabric, wood, direct labor, skilled, semi-skilled, factory overhead, total production cost, administration cost, and the total cost of it. Okay, so this is what is the total cost. As a cost sheet, this is how they are normally costing their product. But this is not a relevant cost. Okay, so we have to put what is the relevant cost in terms of what is the additional cost will be incurred to meet this particular order. Okay, and the assumption is we have already recovered the fixed cost. So that's a concept here. So I think we can start it from here. So first we'll type out all the items. So it is direct material, fabric, wood, direct labor, skilled, semi-skilled, okay, factory overheads. Then we have administration overheads, admin overheads. Okay, so these are the things that we have. So finally we can say that relevant okay, so we have typed all the required things. Now we can start the question. So the fabric is regularly used. Okay, there are 300 square meters in inventory which cost 17 meters. Okay, 17 per meter. The current purchase price is 17.5. Okay, so if you want, we'll take the previous table and we can use it for our, just for your guideline. Okay, we can use it. So number one, is the material already in stock? See, we require 200 meters only. They already have in stock 300 meters, so it's more than available. Okay, is it in stock? The answer is yes. Is it regularly used? He says regularly. Okay, that means it comes here. Then what is the cost? The cost is purchase price of the material. This is the inventory book value cost. Okay, it is the historical price. The current price is 17.5. So our concept is 17.5, okay, into 200. So that is what we want. So I think it will put it in how he is put, 200 into 17.5. So what is the reason? Okay, so reason is it is regular, okay, or regularly used incremental cost. Okay, so it is going to be additionally we have to spend this. Okay, then only we'll get the material. If you take the material already that is in the warehouse, again freshly it has to be replenished. Okay, so this is the cost. What is about the second one? Wood is 50 m is required and every m is 8.2. okay, so he says this type of wood is regularly used by HLCO. Okay, so again we are coming to regularly used and usually costs 8.2. that is like not required for us. Okay, I think it might be historical cost also. However, the company's current suppliers earliest delivery time for the wood is 3 weeks time. So if you order it now, you will get only in 2 weeks, but in 3 weeks. But this production itself will be have to be get over in 2 weeks time. So 3 weeks, normal supplier current supplier we cannot buy from him. Okay, an alternate supplier could deliver immediately. So this is the only option for us, and he will charge 8.5. So this is the relevant costing for us. HLCO already has 50 square meter in inventory. Okay, so 500 they have in inventory, but 480 of this is needed to complete other works in 2 weeks time. Okay, so in 2 weeks time we have to finish those job. Okay, the remaining 20 is not going to be needed until 4 weeks time. So better what we'll do is, already that is in stock, totally we need 50 m, 20 m is already available in stock. Okay, and it's not going to be needed in 4 weeks time. Okay, so what we'll do is we'll use first this, make an immediate order to our current supplier. He will give us at 8.2. So 20 into the normal price 8.2. if you put 8.2, if you put this, we can okay, use or use 20 m and make immediate order to current supplier. Okay, that is what we have to do. Okay, I think we can okay, so that is what we can do here. Okay, if we do that, our cost would be 164. But what about the other part of the wood? Only 20 is there. The balance 30 has to be bought from the immediately. It has to be bought immediately. So immediately if you buy, it is price is 8.5. Okay, 30M has to be bought on urgent basis. You have to buy it on an urgent basis. So we have done till that. We will move on to the next one. So I think wood is over. So we'll move on to the next one. So the next one is, he tells, the skilled labor force is employed under permanent contracts. Okay, I think we can remove the material part here. Okay, and we can have the labor part. If you want, we can have the labor part. Okay, now we can read, the skilled labor force is employed under permanent contracts of employment, under which they must be paid 40 hours per week labor, even if their time is idle due to absence of orders. So you have to definitely pay them for 40 hours. Okay, their pay rate is 16 per hour. So 16 into 40, you have to definitely pay them. Although any overtime is a time and a half. Time and a half means 1.5. Okay, so time and a half means 1.5. Time and a quarter means 1.25. Okay, so it is 1.5. So any overtime would be 16 into 1.5. So that will become to 24. In the next 2 weeks, there is spare capacity for 150 hours. Okay, so direct labor. Okay, so I think we'll remove this, it's not required. So skilled labor, we have totally how much hours they are free? They are free for 150 hours. Okay, for this 150 hours, we don't need to pay anything to them. Okay, so that cost is 0 because they are already paid. Okay, so it will be called as committed cost. We don't need to pay anything. It's a committed cost, so you can just ignore it. So or else we can say spare capacity. Okay, so it is a committed cost, so we don't need to incur any cost there. Okay, and what about the balance hours? See, the total hours is 200, so 50 we got it from here. The balance we have to get at 16 overtime. Okay, this is for overtime, and this is at 1.5 times you have to pay. So totally you have to pay this number. Okay, 1200 you have to pay. So this is incremental cost. Okay, and why it is incremental cost? Because it's overtime, so it becomes a incremental cost. So what about the next one? See, there is no spare capacity for semi-skilled workers. Okay, so you have to pay everything. They are currently paid 12 per hour or time and a half for overtime. Okay, so you have to pay for overtime only. However, a local agency can provide semi-skilled labor for 14. So now you have choice. Okay, so you have a choice here. The choice is external supplier or external agency will put. agency, he can give us at this cost. Okay, what's the cost? How many hours is required? 300 hours is required. Okay, so 300 hours into 14, he will be able to pay. He will be able to give you 4,200, or you can use your own company's labor. Okay, so if you use that, that will be 12 into 1.5. So this is overtime. So what should you do? Okay, what will you do? Will you use your laborers and pay 5,400, or you will use some other external guy for 4,200? Your laborers are already full time, they have worked. Okay, so which one is better? See, 4,200 seems to be better. Okay, so out of these things, we have to choose whichever is less. Okay, so among these things, among these two things, whichever is less. So whichever is less among these two things, you have to select. Okay, so what about the balance? 2 points only we have. The $3 absorption rate is HLCO's standard factory overhead absorption rate. Okay, 1.5 hour reflects the cost of the factory supervisor's salary, and the 1.5 reflects the general factory overhead cost. All this cost is absorption costing, so you don't need to take it account. They are all non-cash cost. Okay, or not? They're all what to say? They're all like apportioned cost, so they are not useful. So so this 1,500, okay, will only be shown as 0 because it is apportioned cost. Okay, so you don't need to show it. Okay, and then he says the supervisor is paid an annual salary and is also paid $15 per hour for any overtime he works. So for any overtime he works, we have to pay him. Okay, so he will need to work 20 hours overtime for this order. So now we have one more element. So supervisor salary. So supervisor, I think overtime will put overtime. We don't have space, that's why we are like constraining this. So 20 hours he will work and we have to pay him 15. So totally we have to pay him 30. See, this is a relevant cost. Why? It is an incremental cost. So overtime is an incremental cost. Okay, so what about the last one? The last one is, this is an apportionment of the general administration overhead incurred by HLCO. So again, this is a apportioned cost. So he itself has mentioned it. So we don't need to take into consideration at all. So here also you don't need to put it. Okay. So what's the total relevant cost? It will be the sum of all this. Okay. So the answer is, I think somewhere we have, okay, we have not like included this. This has to be shown. Okay, the answer is 9619. Okay, the answer is 9619. So that's about it. So when you answer this, you have to be, see, I have used only very short sentences. In an exam, if you are going to write, you have to briefly show it. Okay, you can't like put regularly used comma incremental cost. That won't work. At least you have to write some sentence. Better what you could do is, okay, just I'm showing, you could directly actually take all these things and you can write it as a note somewhere lower, okay, in a lower place, and you can just put the numbers here. Okay, 1 2 3 like that you can put, and you can reference these numbers here. Okay,